So one thing I wish I knew how to do when I first started trading / investing is something called top-down analysis. This would have saved me from making a lot of mistakes and also saved me a lot of money. So in today's video, I'm going to show you guys what top-down analysis is. I'm going to show you guys how you can break down the chart from the 1-day time frame all the way to the 1-minute time frame. I'm also going to show you how the price action is going to look, whether you're day trading or swing trading. So value your time. With that being said, let's go right into it. So what is top-down analysis? This is basically the process of breaking down a chart from a higher time frame to a lower time frame. And what you're trying to do is get an objective opinion on what the price action is doing, right? Whether you can be bullish or bearish on the stock. So let's jump into the charts and show you guys what I'm talking about. All right, so for today's example, we're going to look at a stock called Micron. This is one of the leaders in the AI space. So this is a memory chip company. And before we break down anything, the first thing that I want to show y'all, or I want to make sure y'all understand, is that a stock never goes up in a straight line and a stock never goes down in a straight line, right? So instead, what happened is if you have an uptrend, stock may go up and then find some type of consolidation, right, before it takes off again. Vice versa, right? If a stock is going down, it may go down, find some type of consolidation, right, before the stock goes down even more, right? So uptrend, consolidation, go up higher. Downtrend, consolidation, go down higher. So what I have on my screen right now is something that you call the EMAs. And I believe when you're doing top-down analysis, this is going to help you a lot as far as identifying what price action is doing, whether you're in a really strong trend or you're in some type of consolidation zone that I just showed y'all. So you got your 50 EMA, your 21 EMA, and you have your 9 EMA. So whenever you're looking at a stock and it has a really strong trend going on, whether that's to the upside or the downside, your EMAs are going to have a lot of space in between them, right? So in this case, when we're looking at Micron, right, we're on the 1-day chart right now. So you want to start on your higher time frame, you're doing top-down analysis. We can see that this is the period where Micron had a huge up run, right? And you can see on the 1-day chart, the EMAs are separated pretty well. And the chart is essentially just riding the 9 EMA. So that's a really strong trend that's a really strong sign that a chart is in a big uptrend, right? And now you guys can see that the EMAs are starting to get closer together. This is a sign that we're about to go into some type of consolidation zone, potentially a pullback, right? And you don't know how long that's going to last. Could be weeks, months, but it's a sign that the trend that was once happening has now slowed down, especially when your 9 and your 21 cross over and they get tighter together, kind of like what you're seeing right now. So overall, this stock has been extremely bullish, right? So now I'm going to show an example of a stock that has not been extremely bullish and it's actually been extremely bearish. And just to show you that the same concept applies, right? So this is Netflix stock. I'm still on the 1-day time frame. As you guys can see, the opposite is happening here, right? Netflix is in a big downtrend. As you guys can see, you had a consolidation period over here. EMAs are close together with each other, right? And then you started to have this big pullback. EMAs are separating from each other and the stock is just riding a 9 EMA. So if I go back to Micron, as a swing trader, the price action that you want to avoid is whenever you see the stock starting to go into the consolidation phase that we're seeing right now, right? And similar to back here, whenever Micron went into this consolidation phase that you saw right here, swing trading in this period is very difficult because the stock can be very sporadic. You have a bunch of up and down movement. One day your swing trade could be up 100%. The next day you're down 50%, right? Because you don't know what's going to happen because the stock is just chopping, right? So swing trading in this environment does not make any sense to do, right? Because you can make a lot of money here, swing trade here, end up losing a lot of money. So now that we understand how to analyze the 1-day time frame and when to look at a stock, and how to look at a stock and see what type of price action is doing, whether it's an uptrend, downtrend, or consolidation, let's go down to the lower time frames and see how we can break it down even more and look for opportunities. All right, so now we're in the 4-hour time frame, right? So how can we, now that we know how to read price action and kind of see what the stock is doing, what phase it's in, how can we take advantage of opportunities and look for good setups to potentially do swing trades in, since we're still in the higher time frame? right? So you guys remember Micron was in this big bullish run on the 1 day time frame. We go back, right? Because the EMAs are separating, it's just right in the 9 EMA. If I go to 4 hour time frame, right, what you can look for here is simple price action. What does this mean? What I mean by this is price making higher lows and breaking out of consolidations. For example, right, we go back down here, we saw that Micron was consistently making higher lows, right? So an opportunity to potentially make a swing trade, right, because we know we're heading to this big uptrend, is you could potentially wait for price to break a higher low, to make a new higher low, right? Your entry is going to be the break of the higher low, and then your stop can be the bottom of that higher low, right? Because you know if price breaks this bottom of the higher low, then you've broken the trend, right? You can get out your swing trade. You can have a well-defined stop loss, right? Or what you can look for is to break out of consolidation zones. Example of this is right here, right? So for a while, a couple of days, Micron just traded sideways, right? But we know that's in the uptrend because we went to the 1 day time frame and we saw that price was heading on the uptrend. EMAs were separating, right? It looked really bullish, right? So what you can do in these consolidation zones is wait for price to break above the consolidation zone, have your stop loss below it, right? Because you know that, okay, price comes back down here, breaks below the bottom of this consolidation zone, you know that, okay, price action is now changing, right? But overall, you're bullish because you know where price is doing on the 1 day time frame. So another example is right here. So price was consolidating for a while. You can wait for a break above this line, right? You get in somewhere over here, stop loss right here, right? And you try to capture the up move, right? Of course, the stock can do whatever it wants to do, but what you're trying to do is be objective, take advantage of the trend, and try to find good setups with higher probabilities of it playing out. So that's what you can do until the trend changes, right? So consolidation, wait for some type of breakout, stop loss right here, and just keep on riding the wave until the trend changes, right? Even right here, big consolidation zone, right? You have your entry right here, wait for a break above this price. You could get in right here and then have your stop loss somewhere over here, right? The same thing. Basically, all you're trying to do is take advantage of this big uptrend that we've been having in Micron. And if I go down to the 1 hour time frame, it's basically the exact same concept, right? If you're swing trading, normally you want to look at the 1 day, 4 hour, and the 1 hour time frame to see what price is doing and whether it's an uptrend, downtrend, or consolidation zone, right? But I can look for the exact same things. Example, if I look at this section of Micron, right? Consolidation, you can wait right here, wait for a breakout, stop loss right here, right? The same thing, right? Price is making good higher lows, right? You can come here. So, okay, if you break this high right here, I'm going to get an entry and my stop loss is going to be at the bottom of the higher low that we just made right here, right? The same thing. Made a new higher low, wait for a break above this line right here, entry right here, stop loss is going to be right here, right? The same concept. All right, so now we take a look at that consolidation zone that we saw on the 1 day time frame, right? If I go back to the 1 day time frame, you guys can see that price started to really consolidate around this time frame over here. If I go to the 4 hour, you can see how difficult this is to swing trade, right? You could get in calls right here. One day you're up, the next day you're down a significant amount, right? Because price is just chopping around. This is why areas like this, you want to avoid swing trading in because there isn't a definite trend going on, right? And it's not worth trying to capture anything that isn't there. The same thing on the 1 hour time frame. Right, you could get in calls. One day you're up 100%, the next day you're down 50% because the price is really choppy. All right, so now let's look at the lower time frames like the 15 minute, the 5 minute, and the 1 minute, right? If you're day trading, and let's see if those lower time frames, the price action is correlating to what the higher time frames are showing. So what we're going to be focused on right now is this consolidation zone that Micron is currently at. As you guys can see, the stock has basically just been trading sideways for the past month. So if I go to the 15 minute time frame, you guys can see, if I zoom out a little bit, you can see that the price action is correlating to what the higher time frames are showing, right? The stock is just chopping around. So when you're day trading in situations like this, you can expect a lot of reversals throughout the day, right? The stock just making a low, then coming back, making a new high, right? Or just simply just chopping around, riding the EMAs, right? So when you're day trading this type of environment where the price is just consolidating, you may want to size down or even, avoid day trading at all if you don't want to take a lot of risk, right? Because price action may not be, as favorable, right? You may not get those strong aggressive moves up and those strong aggressive moves down as you would if price was having a, strong move up in the higher time frame or a strong move down on the higher time frame. I'm not saying you can't catch good opportunities, right? Of course, some opportunity may be there depending on what price is doing, but you're going to see a lot of chop, kind of like what you're seeing right now, where price is just chopping around, right? If you go down to the 5-minute time frame, you're going to see the exact same thing, right? Price is just chopping around. It's just chopping around, right? Just a lot of consolidation across your EMAs. And if I go back down to the 1-minute time frame, you can see the exact same thing happening where price is just chopping around, right? So like I said, it doesn't mean you can't catch good opportunities when day trading, but it becomes a lot more difficult when the higher time frames aren't showing some type of strong trend. You just get a bunch of chop, right? A bunch of fake outs. So you have to just be careful, more aware when this situation is playing out like this right now, where price is just chopping around. All right, so I hope that made sense to y'all. I lost a lot of money, a lot of time in my past not understanding the simple concept, right? But the main takeaway is that you want to look at your higher time frames, and that should allow you or dictate how aggressive you're going to be in the market, right? If you're in some type of consolidation zone at a higher time frame, right, the 1 day, the 4 hour, the 1 hour, right, it may not make sense to do an aggressive swing trade or even swing trade in that type of price action, right? Because you're just going to get a bunch of chop. You're not going to get a good solid moves. And the same thing with day trading, right? Doesn't mean that you can't catch a good day trade, right? But more than likely, price is also just going to be doing a bunch of reversals and a bunch of chop if you're trading in a consolidation zone on the higher time frames. That's something that you want to be on the lookout for and just be aware about. So the times to be really aggressive in the market is when the higher time frames are showing strong trends, right? You have good separation between the EMAs and prices just riding the 9 EMA, either to an uptrend or to a downtrend. That's when you make a lot of money in the market, right? You really don't have to trade every single day. You can literally just wait for certain market conditions every year and take advantage of that opportunity when it presents itself. And just be patient as consolidation zones start coming around. So I hope you guys found this video valuable. Make sure you like, comment, subscribe, and I'll see you guys in the next one.